Hey, what's up, guys? Closing out the week. I'm going to do a global macro update, and I'm going to touch on if anybody missed the recaps from morning recap trading session from Friday. And a reminder, I'm doing a free webinar Sunday night, 7 Eastern. I'm going to be going. We have a lot of new people coming into the group, the community. I'm excited about my new partner, and I'm just going to touch briefly on what we're going to be going over in that webinar, but it's probably, I just spent a lot of time on this slide deck. It's the best slide deck webinar I've ever done. We're going to talk about psychology of trading, which is real deep. That's one of my favorites. I haven't talked about it in forever. But everything in trading is backwards than kind of what we've been conditioned to. I'm gonna hit on that, but simple things that you can bring into your trading week next week. You got to kind of have a paradigm shift and rethink the way you approach markets. Everything is literally backwards from what we grew up with. So you don't need to know what's going to happen. You have to embrace the uncertainty. So there's a whole mental shift there, but it really helps with the consistency. I think you get a lot out of it. I'm also going to go over the cycle stuff. Some of you that have been with me for a while, you know this. I'll touch on that briefly for those of you that are new. I have a lot I'm coming at you guys with, so I'm excited about it. Maybe too much. I'm trying to condense it down. There's going to be a lot of great value. So I also just hit on what we did Friday. So let's get right into it. I'll leave the webinar descriptions in the email I send out, obviously, and then I'll put it in. If I put this on YouTube, I'll put it in the video description links. So just to recap again, Friday, it's boring, but you want trading to be boring. This isn't for markets aren't gambling. It's not you come in here, take a bunch of risk and you know get all amped up either way. It should be boring. The process needs to be methodical and focus on the same thing over and over again. And that's exactly what happens with cycles. That's part of the process is just getting this down to where you almost know what's going to happen without needing to know, but you're just focusing on executing. And then the wins can get exciting. What you do with that, taking the bank slip to deposit that could be exciting. So yesterday or Friday, I talked about this is the box. You open. You don't have to spend a whole lot of time figuring out what's going to happen or what should happen or you think this or that. You remove the ego. All we had was an uptrend. This is the 5-minute chart. These are the highs. This is the TMS for the higher low that matters. There's a trade inside of here on the 1 minute. And then once this broke, that was your roadmap for the rest of the day. And there's plenty of moves here to capture. There's a move here to capture. There's a move here to capture. There's a move here to capture. This is a move to capture. This is a move to capture. There's actually two inside of here. So there's a lot to do day trade. And then again, I'll get into this on Sunday. But we came in and I don't want to spend a lot of time on the day trade because I did that on Friday. If you want to look at the other videos, I want to get more into bigger picture global macro. I want to touch on some cycle stuff that I'm going to go over on Sunday. It has to do with NVIDIA. It has to do with there's so much that our model encompasses that you're going to apply it to lots of different time frames. So I'm going to get into that. All right, so there's the 5-minute downtrend. Let's just hit on the 1 minute real quick. All of these concepts, it's cyclical and trend based. So actually, let me just show you right now. So you have, we built the model, we're building the model out into the algo, the cloud, AI, blah, 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 whatever you want to call it. Here's the 1 minute on the NASDAQ. And so anyone that's kind of comes involved with what we do, our community, our team, this is available to you in one form or another. This is just the afternoon trade, short cover, all with the cycles. Out of the way here, out of the way here. And then this was the morning trade I'm about to explain. What I teach my guys, and this is the beauty of once you learn how to trade and you actually own the concepts, own the knowledge, own the skill sets, you can always add a bot or this and that technology to your repertoire. But this is just having the peace of mind of knowing how to view markets, the trends, the cycles, near term, intermediate term, long term. It's something that no one can take away from you. And that's the value that we've had. That's everything I've worked for a long time and struggled with and blown accounts up with and basically my whole life. So there was trades here to be short, there were trades here to be short. Even though this particular bot was running 1 minute bearish, it didn't pick that up, but this was a trade easy. This was a trade easy. This was a trade easy. This is a trade easy. This was a good trade too, tight stop. That's plenty right here to pull a good amount of money out of the market. And you can always add the zeros. If you're trading one contract futures, if you're trading, we're talking about stocks, you could run it on Apple. You can always add the zeros. The key is the process. So whether it's $100 or $1,000, the consistency is what matters, having the process. And so I'll show you real quick where I got involved there also. So here's a 1 minute. This is NASDAQ. Okay. I talk about, here's a wall concept. My traders know this was the highs. We bought it with S&P on the low. That helped us take some profit off the bat. Try a contrarian short. There's a swing line here that got taken out. You sell that with the top of the cycle. Boom. Nice trade. Actually did the same thing. Long S&P in conjunction with the NASDAQ. But I'm just trying to keep it brief. Same thing. Trade up in the context of the downtrend. Use a cycle. Boom. Short. Cover. This was there to be had also. I caught that with the Russell. Secondary move, 5 minute cycle. Worked the long on the way up, different time frame. Sold S&P here, sold S&P more, sold NASDAQ here. Boom. You catch all that. So I'm going to go over that on Sunday, how to do that a little bit more in depth. Here's what that looks like. Russell, the NASDAQ short I just talked about, secondary NASDAQ short. It was the same thing on S&P. You guys get the point. All right. I'll go over more on Sunday and a lot of other concepts. Let's get into the big picture. So I always start with the dollar. Get the dollar right, you're going to get a lot of other things right in markets. This is big. Between the dollar and rates, it's always the dollar and rates that kind of lead the way, big picture. You can have stocks doing one thing, Apple, Microsoft, AI narrative, completely ignoring the entire economy. All right. Bonds, the dollar, look through a lot of that. So when I talk to people that are always like, in my world, the institutional world, bond guys, the market was the bond market. Most people you talk to on the street, well, what's the market doing? They're talking about what? S&P, NASDAQ. If you look at those markets, it's a handful of stocks. It used to be the FANG stocks, and then Netflix crapped all over itself. And now it's Meta, and the acronyms change. But the point is that it's a handful of big tech companies, is not the whole market. You want to talk about the Russell. There's so many other markets, commodities. You want to talk about all the underlying breadth of what actually is the economy has nothing to do with just 5 stocks, tech stocks in the S&P. But I think this is key. So the dollar's been in an uptrend. The economy is still slowing. This was a big break here on the dollar last week. And my thoughts were, okay, if we can't hold here, we've been dollar bulls for this, and I still think you're going to get this at some point. I'm actually starting to think this is a fake breakdown. I was okay with this breaking here, and our analysis says, okay, then you go back to pi. And that's going to reinflate a lot of commodities, which comes in exactly with the timing of the Fed backing off of Wall Street, old wall going, oh, yeah, okay, we've defeated inflation. As soon as they signal that, what happened? Dollar broke down, oil breaks out. Oil is the biggest component of the official CPI, because real inflation is running at 15%. You could even, if you calculate rents and everything that should be calculated, and you could say it's running at 25%, which is crazy, but it's not. I mean, everybody feels it. We're still in a long-term downtrend for oil, and that has to do with the economic cycle. But when you zoom in on the more intermediate term, you're starting to get a move above the band, above what we call our trend line. So there's reasons to think that oil can go higher. It's very similar to a lot of the commodity space. So that breakdown in the dollar was huge. It's just we've only had 1 week down. I'm not convinced that it's over. Reason being, the bond market's not convinced. You've had this wedge going on in treasuries and rates, right? We called this low in October. I've liked buying bonds here. We bought 2s on the low. And we wedged, same thing, break down, right back up. So there's this tug of war between the economy, majority of markets pricing in the recession, and an AI narrative rally in equities. So maybe that caused choppiness. Probably also has a lot to do with it's the summer. Markets are more thin. People have had equity guys have made a ton of money year to date off the lows in January. And we haven't seen the volatility yet return. But I'm telling you, there's a big move coming in vol. That's why I've been talking about the options market. Back half of this year is going to be some really good trading. The VIX is back to levels we haven't had in a long, long time. This is the futures market, which incorporates most of the front end. We're sitting down here at 12.13 when the economic numbers are some of the worst they've been. Every time you get down here, guess what? Through the summer, boom, vol rips to above 30. Then down here, explodes. So it's not surprising. Big picture. Look at the Russell. Small caps have been down since the top of the economic cycle here in November of 2021. Right? Nothing but down. We haven't even made higher highs in the long term yet. This has just been an easy. Every time we want to go short equities, the first thing we do is go to the Russell, the small caps. They have the liquidity issues, the debt issues, all the fundamental issues I can get into, all the debt refinancing, all the corporate high yield problems, on and on. But all we've done is rally back to the highs every time that we failed at. So that happened last week. Not surprised Russell fell to 2,000. That's major. That rolls over. It's just a bear market bounce. Tesla reaches 300, fails. Back to levels where, not surprising, you failed at. After coming to being oversold here into pi, boom, fails there. So I'll get into more of that again tomorrow. But point being, I think it's just that we got to watch the dollar, whether or not this euro, the dollar, euro is the biggest part of the basket in the DXY. It failed in front of pi. Coming from below parity all the way back, I'm not a euro bull by any means. Pound failed, same thing. I said in October, bond market, there was a capitulation. Bond market bottomed. That was the bottom in rates. We're moving into this growth slowing recessionary call. US Treasuries bottomed. UK capitulation, bond market, UK real estate, everything's the same. So you go from here, you cycle away from pi, you cycle back to pi. Failed right there. This is one of the best ideas that we've had. I've been saying to be a core short the pound, you could easily be back to 120. There's lots of opportunity to trade in and out of this, but core short is the way to be, and failed exactly bear 180. Again, some of the stuff I'm going to go over on Sunday right there. Boom. So I'm not convinced that this dollar is breaking down at all, just like I'm not convinced, as is the bond market, that growth is not slowing. Rates tried to move up a little bit, broke the wedge, right back. Dollar right back. And then you had equities follow up with the failures I just mentioned. So that's kind of where my head's at. We've talked about gold being one of the best places to be long. I said 1900 is a great spot that we could probably find a long-term high or low, even though it's in between what we call the break of the bands here. That's tough. Anytime you break the bands within the trend and you get the deeper pullback to the 200 or pi, this is kind of tough to trade. A lot of people give up. The bulls that are chasing, they puke. So there was ways we were managing that via short copper, via short silver against that. But I said 1900 is a good candidate for a higher low, and that's exactly what happened. So now we're dealing with this 2000 pivot, but I still think all the macro is still in place. And you can see gold go higher even with dollar getting firm or rising. So good call there. I think that's plenty for now. I'm going to again include the links, guys. So this is the webinar we're doing Sunday. It's free. We'll hang out. I'm going to go over a bunch of concepts, especially for those of you that are new. A little bit about my background, where this trading journey has taken me. Most importantly, the cyclical work. I'm going to talk psychology of trading, which is huge. Everybody forgets. Most people just focus on fundamentals, technical analysis. And I've always said, nobody talks about cyclical analysis. It's actually a pretty new field I think we lead the way on. And then the mental analysis is something that everybody leads out. You got to work on the mental analysis all the time. And again, cyclical analysis is what we do best. So we'll see you Sunday. I'll send this out again in the morning in case you missed it. And look forward to talking to you guys then.